Too much demand, not enough supply is why China is in a race for resources, right? But there's some that believe that China is about ready to take a major slowdown, the proverbial hard landing, which could then reduce demand for commodities, as well as why is China in Africa snapping up commodities from all those impoverished nations? And I'm the guy asking those questions. Dambisa Moyo has the answers. She's the economist and author of Winner Take All, China's Race for Resources and What It Means for the World. Very happy to have her on set. Dambisa, in Los Angeles a few months ago, you and I was arguing with you. You were telling me why I was wrong, as usual, about China going into Africa, extracting resources from a lot of nations that a lot of countries won't do business with or shouldn't, Congo, Chad, etc., to feed their growing appetite. I think it's a bad thing. You disagree. You're probably right. Tell us why I'm wrong.
I'm definitely right, and thank you very much for having me on the show. The fact of the matter is it's a win-win, if I may use a cliche, win-win situation. China is offering trade, investment. These countries have 60% of their population under the age of 24. You know, in countries like Uganda, 50% of the population is under the age of 15. We need jobs, we need investment, we need trade. You absolutely don't need pity, don't need aid. And by the way, it's not just Africa. Brazil, Chile, Russia, Kazakhstan. The fact of the matter is China is it's open for business, and this is very important for these regions.
Well, I mean, China does nothing out of the kindness of their own heart. I mean, you're absolutely right. It is a win-win, right? But could you even go so far as saying that a lot of these really impoverished countries, like in places like Africa, that actually it's lifting a lot of people out of poverty because they're building roads, they're building bridges. And yes, okay, so China is benefiting from this as well, but they're putting a lot of money into these economies.
Absolutely. And as I said, it's absolutely essential for long-term economic growth, but also for undermining or reducing poverty, which is what we need. The issues around income inequality, issues around being able to meaningfully put a dent in poverty over time require capital investments, and the Chinese are willing to do that. Are there costs? Potentially there are, but these relationships are evolving, and I think it's really essential for us to focus on that. I'm a big bull on commodities more generally because I fundamentally believe that this is setting up a floor around the world in terms of resources.
The wealth in Africa is so concentrated at the top in a lot of these countries.
Oh gosh, you really need to read more books because the fact of the matter is that is changing. It's an old story. The reality is we're going to have 3 billion new people in the middle class in the next 20 years, and the fact of the matter is a lot of them are going to be coming from Africa.
In sub-Saharan Africa?
Sub-Saharan Africa, absolutely. We are seeing dramatic changes. This year alone, look at the IMF statistics. After China and India, Sub-Saharan Africa is the 3rd fastest growing economy this year. And the reality is because
well, some countries, Zambia, Botswana, they've been doing well. They have made pretty free markets. What about Congo, the countries I'm at, the leadership problems? Even Nigeria is a constant struggle over resources.
But Brian, it's far too easy to be critical about these places. The fact of the matter is that you'll miss the bigger picture. There are a number of countries now that have credit ratings. There's much more investment going on, as I mentioned, FDI and trade, much more in terms of opportunities. And the reality is Africa is not in this deleveraging problem that the rest of the world has seen. It's been ring-fenced for many, many years, and I think there are lots of opportunities for investment.
Do you feel that there is a risk, however, with China slowing down, and to what extent we do not know at this stage, and places like in Africa and even Chile, which I believe out of the Latin American economies is the most leveraged to China now with its copper exports. If China slows down significantly, what happens to these export-oriented economies?
No, I think absolutely there will be some knock-on effects. I mean, to sit here and say there would be zero would be absurd, but I think that, it needs to be taken in the broader context of what's happening in China. I'm actually of the view that China is not going to have a hard landing. I think that we are already seeing a slowdown. I think that even the worst-case estimates that I've seen is China at 7%, 7.5% GDP growth. That ain't too bad. And the fact of the matter is with commodity supplies growing at 2% a year, the gap still is a 5%, which is why I'm bullish commodities.
You tell me I'm wrong nicer than anybody ever has on this show.
I think you might have single-handedly made him that was actually his admission that he was wrong. There you go.
It was, but she did it so elegantly, and I was like, oh, you know what? I was wrong.
Okay.
I'm not even upset about it.
I like that.
Dambisa, we have to leave it there, but it's been a pleasure to have you on the show.
Thank you.